Thanks for joining us, and happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities, and we're getting ready to put the wraps on a very busy trading week here, and we're setting up for something a little unusual. Over the next 3 weeks, we're going to have two extended holiday periods. One will be coming this weekend. Just to remind you, there will be no trade on Monday. And then we'll have a short trading week, and then we'll have the end of the month, of course, coming up. And then we have the July 4th weekend, where there will be no trading on that Monday either. So it's going to be an interesting 2 or 3 weeks coming up here. And I want to bring in Brian Hoops. He is with Midwest Market Solutions. He's based in Springfield, Missouri, and we'll talk about all this. Brian, I just got some news off the wire that we had sold some corn overnight. Let's take a look at what we had for the overnight export sales. According to USDA, we had two different batches that were sold. One of 144,907 tons went to Costa Rica. That's not one that you hear a lot. Costa Rica sales there. And then you had another batch of corn, 105,664 tons, and that was earmarked for unknown destinations. Both of those are kind of odd amounts. They don't necessarily match up to boatloads or cargo loads. So it's a little bit mysterious on who that unknown buyer might be. But in total, we're talking about 250,000 tons of corn sold overnight. Does that lead you to think that some foreign countries or foreign buyers are starting to suspect that maybe there's a temporary low and they better buy while they can?
Yeah, good morning, Marlon. Usually that's what we want to tend to think here this morning, is that, even at these higher prices, these foreign buyers are still stepping in and buying corn. And of course, they need the corn to feed their countries and feed their animals in their country. So it's imperative that they continue to buy. And the fact that they're buying from the U.S. is really the bright spot here. One of those sales for the old crop variety, one of the sales for new crop corn. So especially on the new crop corn, it tells you that they're likely looking at prices moving higher, getting some hedges in place, in case prices do move a lot higher, especially as we talk about this heat that's moving into the Midwest. It's here. Some areas are taking the heat real well. There's reports of a lot of corn starting to curl already under this heat. And, it's not so bad right now. It's the middle of June. You expect it to be warm. But the problem will be is if we extend this heat and dryness through the end of June into early parts of July without any moisture, we're going to look at curtailing yield significantly. So, you have crop ratings coming out on Tuesday afternoon next week instead of Monday, as you alluded to, because no trade during Monday. There is a trade overnight, Monday night. I want to mention that grain trade resumes at 7 p.m. Monday night. But then your crop ratings likely show a little bit of a loss as far as good to excellent ratings in both corn and soybeans come next week.
And the weekly surveys will be done on Sunday as usual. They just won't be reported until Tuesday. Just wanted to point that out. So on the corn overnight, with this long weekend coming up, apparently everybody's putting a little risk premium back in there before they want to be gone very long. And July corn, 10.5 cents higher overnight at 7.98 3/4. And you have December new crop corn up 12 3/4 last night at 7.47 3/4. Let's go to the soybean trade. Our quotes are provided by bar chart here. So we had July up 7.5 at 17.17 per bushel, and November up 8.5 cents at 15.51 3/4. Of course, as we all know, the wheat harvest is very active right now. And in Chicago wheat, this would be your soft red wheat. July was up just 1.5 last night at 10.79 3/4. In the hard red wheat, this would be Kansas City wheat. It was down 1 3/4 on July at 11.46 3/4. Boy, by the time we come in Tuesday, they're going to make a lot of wheat harvest progress by then in the Central Plains. Spring wheat trade last night, we had July going down 4 cents at 12.05 per bushel. Well, we'll come back and we'll talk livestock with Brian Hoops right after this. Come on back. Okay, let's go back to our talk with Brian Hoops of Midwest Market Solutions and talk about this livestock situation. Okay, we've talked about this at length here, Brian, about the heat and humidity out in the plains. Obviously, we've had high casualty losses on feedlots and even in pasture land, I understand. Especially from heavier cattle out there. They have a hard time handling severe heat and humidity, especially when the wind dies down. You you can't escape from it really. And it's really hard on livestock. And here we are, we're still a few days away from summer yet, Brian, and we have a really hot start here to the summer season. First of all, the death losses we had in cattle, do you think we're going to be hearing more of that here in the coming week? And what kind of impact could that have on the livestock, maybe the slaughter rates and also on the overall market?
Yeah, we've heard a couple thousand head that have died, and it's unfortunate, but I don't think we're going to see a lot more animals being lost due to the extreme heat. Most of the feedlots have either some sort of shade or sprinkler systems to kind of help these animals get through that. And steer weights unchanged from a week ago shows us that we're really current, keeping some of these heavier weight cattle and marketing them real aggressively. In fact, a week from today, we'll have a cattle on feed report coming out, and it should show a marketing effort very strong, probably 4 to 5% above year-ago levels. Part of that is because of this extreme heat. Part of it is just because we want to keep these cattle moving so that we don't have to go through the heat of the summer with a little bit heavier cattle. So I don't know that we're going to see a lot more death loss going forward. Hopefully that's not the case, that we don't. We may see some cow slaughter being pushed ahead. Originally we had some real good grass pastures growing in parts of Texas after some heavy rains through the winter, but that's certainly dried up, and now they've starting to lose those pasture conditions once again. That may mean that we're going to increase the cow slaughter as there's just nowhere else to go with these animals.
Well, yesterday we saw a big washout in the equity markets, and let's take a look at the Dow right now and see where we stand. We went down below 30,000 yesterday, and right now we're still hovering below it. We're at 29,937 on the June Dow futures. That would be up just 9 points as it stands right now. Now, overnight, it actually got up to 30,214 before falling back away from that. We're getting closer to the low of the evening and early morning now. Just wondered how much pressure that big drop in the equity markets could translate into when you talk about our beef and pork demand.
Well, yeah, certainly that is one thing that is going to limit the upside, I think, in this cattle market. Any type of rallies we see are going to be hedged or sold by feedlots and by traders concerned about the sluggish economy, the consumers' 401ks being cut in half, higher gas prices. All these factors we've been talking about is a concern for the demand for cattle. You also have higher corn prices to start the morning off. That's probably going to weigh on the feeder cattle market. It did yesterday. We're going to start off on the defensive here this morning. But we saw a break in the dollar yesterday. That may encourage a little bit more demand for beef and for pork, especially if this dollar can continue to weaken and build off of that reversal that we saw on the charts yesterday.
Let's review where we finished. And in the futures trade yesterday on live cattle, we had that August contract going down by 50 cents at 136.30 yesterday. Meanwhile, on the feeder cattle side, well, when we settled things out, August was down $1.97 at 171.30. And on the lean hog market yesterday, we had that August contract up $1.70 at 106.02. That will be our starting point for today. Brian, great information. Thank you for joining us. Appreciate it, sir. You have a good Friday out there and a good long weekend. Brian Hoops of Midwest Market Solutions. So, Suzanne, we're about ready to kick everything off at the bottom of the hour. Stay tuned.